Brandon. Hello.
Yo.
All right. Well, man, we haven't had a Friday this red since last Friday and Saturday, Sunday, Monday, skip Tuesday, Wednesday, and Thursday. Red days. So, yeah, man, it is very interesting what's going on. And let's do a quick survey. If you were to blame one group in particular for the selling, don't just say low IQ, because that's most of crypto, even old school. But if you were just going to say who's selling, is it Wall Street? Is it retail? Is it Robinhood investors? Is it retail crypto people? Is it whales? Like who keeps selling? Now, you can't count these dumbasses that go high leverage. They're just the James Wins of the world, just going to lose no matter what. They're going to lose when the market's going up. They're going to lose when market's going down. But what do you think is the biggest group of losers, of sellers right now? Remember, leverage gamblers are losers. They're not really intending to sell most of the time. They're trying to profit from their trade, whichever way they're going. So, no. And no. Kinda. Remember, you guys, there's no such thing as manipulation. Anybody selling for a profit or buying is always under the assumption they're going to make more money. There really isn't the kind of manipulation that you guys are talking about. Would be more like, I think in the crypto space, the manipulation would be someone that has so many tokens that they know that by selling it will corrupt markets, and they're looking at liquidity. They're looking at perp platforms. They're knowingly trying to cause a crash, and that's not really what's happening either. The biggest group, Brandon, what do you think the biggest group is?
Well, I mean, I can't answer that.
You can't answer that.
Well,
you just said it.
Well, yeah. I mean, well,
it's whales. It's whales. It's not JP Morgan. It's not banks. It's not institutions at all. Matter of fact, institutional inflows are consistent. In, not out. In. It's not ETF selling either. Remember, that's a byproduct of two things. One, market go up, market go down is not a direct. Meaning, if the price goes down, Shante, that doesn't mean that there's ETF selling, because you can hold on to the ETF, whether it goes up or not. Like I have a lot of shares of ETH. Price goes up, price goes down. I don't sell it. I'm selling calls around it. The only time I would sell it is if the price went up, which would be contradictory to what you're thinking. So no, it's not ETF selling. Remember, there's two markets there. There's the buying and selling of the ETF, and then there's the ETF that's priced according to the underlying asset. Those two, but up and down in the underlying asset, making up and down in the ETF doesn't necessarily make inflows or outflows. That's all a sentiment in the retail market. So whales, it is whales, and it is what they refer to as ancient whales, people that have held, I think, longer than 5 years or something like that. And everybody says it's a little different, but whatever. It's whales selling. It's not because recession. It ain't banks. It's not BlackRock and institutions and all that. It is whales that have been in the crypto space for a long time. They have life-changing money. They've said for years, we're going to sell against Wall Street. As the prices started coming down from 125, as the prices started coming down, you probably had a lot of them saying, I'm not selling below 100. I'm not going to let this thing go to 100 and then sell. I'm going to sell it before then. So what happened? Starting last week with a little bit of bad news and some bad timing and some coincidentally bad structural problems over at a few exchanges. And it wasn't just Binance. It was other exchanges too. They're just smaller, so you don't hear about it as much. But it was a perfect storm of selling and malfunction, and it got us to the point where we were probably over the weekend. And you saw the weekend flatten out. Saturday, late Saturday, Sunday, flattened out. Started to recover on, was it Monday it recovered? or there was a recovery to like even just Ethereum got 4,200. I think Bitcoin got back to 116, right?
Oh yeah, I forgot that even happened.
Yeah, this was only Tuesday. We're only on Friday. This is 3 days ago. All right, this is 3 days ago. So, and then you had more people come out and say, okay, I'm selling. But the sellers were not retail. The sellers were ancient whales. And there's a second smaller group. There is a big contingent of they're kind of like whales, but they're not necessarily ancient, but they're whales in the Asian markets, specifically the South Korean markets. I guess they're big on ceremony and things like in superstition. They still believe in the 4-year cycle. And so they said that there was some big conferences over the last couple of months where basically the net opinion was we're selling because 4-year cycle. And listen, they also won't step on a crack because they don't want to break their mother's back. And people that are superstitious, whether they're poor or they're rich. Like the crazy lady in the street that's kind of avoiding cracks in the street because whatever, is the same as the crazy rich old Asian dude with 200,000 Bitcoin. Well, not 200,000, with 70,000 Bitcoin. Who's like, oh, no, 4-year cycle. You're not going to convince them otherwise. It's, again, finance becomes a religion to a lot of people. And they're just, like Brandon said the other day, the guy that won't change his socks. Otherwise, the Steelers won't win. If he changes his socks, the Steelers will lose. By the way, Steelers are kicking balls this year.
What? Are they?
Yeah, 4-1 so far.
That's not bad. That's a win.
Yeah.
Good for them.
I can be proud again. But anyway, so what you have is this similar to the Germany? Chris, what the shit are you talking about? Completely unrelated. Not even on the same universe. Good answer, Scott. Yeah, this isn't, it's not about disbelief. It is about two groups. Rich, old school Bitcoiners that are wealthy as F, and they're just like, I'm out. And they got their 100K recently. Remember, where were we this time last year? We weren't even in the election yet. We were under 60K in Bitcoin. Think of where it was Tuesday, 116. So just about a double since we were 1 year ago. So think about your mindset. You're an old school whale. You're at 60K. Remember, part of the year yesterday, Brandon, when we went to the Getty, Bitcoin was 37,000. Remember?
What? That's almost hard to believe.
Yeah.
That's
I bought Bitcoin
crazy.
at 37,000. Remember? And I peeled off part of it. That was my down payment on my house.
Yes, that's crazy.
Yeah. I sold on the election in the 70s. That was a double. That was anyway, long story short. So
yeah,
you got a lot of people that watched their wealth do a 4X in the last 13, 14 months. A 4X. Yeah, a lot of people thought they were there was a lot of talk about that game being lost. Yeah. But it was well fought. So you had a lot of people that saw their whole net worth do a 4X. And these are just straight Bitcoiners, old school Bitcoiners. And there is something magic about 100,000. There just is. And you get past 100,000, you're like, yeah, the momentum. And then as it starts to come down, when Bitcoin had some trouble at 125, 126, I think that cemented it for a lot of people. They were like, I'm out. That's it. I'm out. I'm taking my 100 million, my 30 million, my 62 million, my 41, my 18 million, whatever. I'm out. They've been laughed at for 15 years. And they were like, you know what? Fuck you. And they're right. Like, you got to give them that. So, which is a good thing. It doesn't look good right now. Everybody's like, oh, we're bleeding. But when you get those big sellers out of the market, the people that are definitely going to sell, you just don't know when. At some point, there has to be churn in the asset. People have to get out of all these fucking dummies lining up to buy gold at all-time highs. These companies are laughing their asses off. They're like, these fucking morons. Here, let's get more. Here, take as much as you can. They're like, oh, because debasement. They're so stupid. Doesn't matter. They're spending their stupid dollars. Let them go. Buy as much gold as you can. Why? Because debasement? Yeah, sure. Good argument. Don't look at the data, though. Don't look at the last 40 years. Never mind that. Just carry on. Buy your gold. Go put it where you're going to put it under your mattress. Fucking morons. Anyway, point is, as you churn these ancient whales and these people that are hell-bent on believing that the 4-year cycle is a thing, when you get those people out of the market, you do two things. One, you raise the net IQ of the investor a little bit, because the cool thing is leverage players are playing on perp dexes now, which actually makes regular retail investing, it's starting to raise the IQ. You get rid of the old whales. That's really a net zero. I don't think it makes a difference as far as the investor IQ. They sat on Bitcoin for over a decade. They cashed out. See you later. Bye. Awesome. But what you do is you set it up where the main buyer is now going to be the institutions, and institutional and retail flow is probably like the only thing that's left. So I think this is a good thing. I am surprised, and I want kind of Brandon to talk about this a little bit. I am surprised that we haven't seen any even breath of a rebound yet. Now, I did say that based on the data of what liquidity providers, market makers, and things do when they have this big crash, remember, this was just last Friday that was the big Trump crash. Everything was fine till Friday, and everything was fine again on Tuesday, 3 days ago. So don't let recency bias kind of jade you. But when the market makers, the liquidity providers and stuff, when they step in, they do a variety of things. And it takes about 8 to 10 days to clear this out. We're on day 8. So, Brandon, how do you look at the market right now?
After that big hit that we took on Friday, I mean, a lot of the 4-year cyclers said, you know what, that was the top. I see a lot of that sentiment on the timeline, on the algorithm right now. Everybody called the top. Like, literally everybody's saying it was the top now. And so everybody's selling because they're like, well, we don't want to get caught in a 4-year bear cycle. And so I think that's a little bit why we haven't seen a rebound, because people are selling into that news and into that narrative as well. And it's going to take a lot to break, I guess, that sentiment here. So, I mean, we're 8 days in. I would have assumed it would have switched by now, which is super shocking to me. So, yeah, this has been a little bit of a painful week watching this keep going down, which is kind of weird. I still don't think that was the top. I think the 4-year cycle's pretty much dead, but the people that do believe the 4-year cycle is dead and then that was the top have enough momentum and have enough money to swing the market down. So that's what we're seeing right now.
I don't often agree with Barry, but no, I'm just kidding, Barry. No, I think I mean, I don't know that we're at the bottom. I don't know whatever that means. I know that there's 2 different markets now. There's Bitcoin and Ethereum, and then there's all the other dog shit. I think that for the crap assets, which is most of them, I never used to say, like, I even don't like it when people say, oh, shit coins and all this. It seems like just a simple way to label stuff. But we're in a place where that is uncomfortably appropriate. So we'll say that the alt market, and I think somebody had brought it up yesterday or the other day that maybe Ethereum is no longer an altcoin. I think there's a pretty good argument for that it's Bitcoin and Ethereum and all of the other alternative assets.
Yeah, I don't think it's an altcoin really anymore either, given that it has the institutional adoption it does. I agree.
So I guess where my head is I look over the next quarter, this next quarter that we're in. So what typically happens in the fourth quarter of the year? Markets are generally more positive. Going to the holiday times, people are happy. The year's behind us, looking forward to the new year. It's the same psychology that would make people negative the sell in May, go away, which is so stupid. That hasn't been accurate in like 10 years, but whatever. Sell in May, go away. So, but that same weird sentiment is positive in the last quarter of the year. What else do we have? The government will turn back on at some point. That's a positive thing. In a week and a half, the Fed will cut rates. Probably going to be quarter point, but they are going to. I mean, Jerome Powell's all but said it, right? This is the guy that strong and resilient 3 months ago, and now he's like, "Oh Jesus, this thing looks bad." Yeah, they're going to cut. Everybody in the world's cutting. Some countries are getting near or at zero. So the cutting cycle continues, and that's, again, it's stupid. It's stupid psychology, but it's psychology. Psychology moves mountains. So that's a positive thing. So government turn on, positive. Fed cut, positive. Whales gone. Whales that would dump, positive. All of these idiots that keep getting liquidated. You notice the liquidations get a little bit smaller each time because there's just less money to spam into that market. So those people are going away. So the net IQ, although again, that's on the perp dexes, and I don't really think that's having too much to do with what's going on I don't think the hyper liquid is not moving the market, right? The market is moving around, and people on hyper liquid are responding to that with getting liquidated. Okay, so you have positive fourth quarter, rate cuts generally positive. Trump tariff, he's already walked that thing back. No one even cared. The same thing that crashed the market last week did nothing today. He said, yeah, everything's going to be fine. No one cares because people feed on bad news. And I don't think you're going to have the same mechanical breakdowns that you had in a lot of these exchanges that we had last Friday. That's not going to keep happening, right? Those are kind of one-off events. So there's like 4 positives, no real bad news that I can find anywhere. Everything looks, oh, by the way, in-kind redemptions and staking rewards in IBIT in the ETF, not in IBIT, in ETH would be coming here pretty soon. All of the Ethereum ETFs will probably be allowed to get staking rewards here in the next, whenever the government turns back on and the SEC greenlights that stuff. That stuff would have already happened, by the way. That would have been mid-October without the government shutdown. So we'd have already had that. So that's a 5th positive thing. So all of this negative. So the only thing working against that is 4-year cycle.
Yep.
Which is a religion. It's not even a good religion, because if you ask people about the 4-year cycle, they can't quite explain it. Why is the 4-year cycle? The people that are in altcoins, they don't have a fucking clue what the 4-year cycle means. That had to do with Bitcoin and the halving cycle. That's what that the halving cycle created this 4-year crypto business cycle. Shit didn't have anything to do with like low rent ass altcoins and stuff. That's all spammy shit. So, yeah, fetch, God. Talk about it, just a debaucherous pile of backstabbing, throat-cutting, suing, finger-pointing shit. Have you been following that closely, Brandon?
I haven't followed the news as much, but here's what I've followed. Oh, wow. Hold on. Something just happened. Oh yeah. So yeah, I followed the token price. Yeah. I mean, it's bad, which is awesome.
It's been getting dick punched. And so I guess they were trying to freeze the tokens that Ocean Protocol, because remember Ocean Protocol and Fetch, which was run by Humayun. Okay, and just real quick, just so you guys remember, we talked about this so much that everybody told us, like, enough is enough. Quit talking about this ASI merger. We told you guys, we told everyone that would fucking listen. Everyone that would listen. This is a mistake. This is a fail. This is going to destroy it. That was when Fetch was $3.50 a token. You guys remember that? Wasn't that long ago. Fetch is what, 25, 26 cents? Let me take a look.
Oh, man, it's brutalized. For a while,
right now.
I was like so mad I swapped out of my Fetch for Jupiter. Now I'm like, oh, I got Jupiter, which is now what, 50% higher than that, and I have the ASR reward, so I'm happy with that swap.
Yeah. So we told you this 92% ago. This was a fail. It was based on bad math. All of the players were all sketchy, and Ben, because he's a computer scientist, he's just focusing on robots and shit. And he was assuming, oh, Mario will do what's best. Mario's a fucking snake. David is a fucking snake. Janet is an idiot. This whole thing was fucking stupid. We said this for over a year. I even had people hit me up from the group, from the ASI, their Telegram thing, and they were like, "Yeah, man, yeah, you were right." Yeah, no shit. If you put a bunch of garbage in a bag, you can't just mark AAA and sell it.
They call you out for that too, didn't they?
Oh, of course, yeah. You're just angry. I'm not angry, dude. God damn, it's math.
Yeah.
And it killed it too because it took some good investment away.
It really did. I mean, by the time I got all the way out, I probably DCA'd out because it felt pretty hard right then.
Nice one, Scott. You probably were the best because I DCA'd out too.
Yeah, I mean, I DCA'd out. I mean, my last sell was like at $1.20 or $1.10 or something crazy. So, yeah, I actually should talk about that in detail. Should we talk about that behind the wall or do you want to talk about that?
Let's talk about that for members behind the wall. And also, what does the dip do for Morpho loans? All right, Dan, I'm going to help you walk through this in your own mind. You had a loan and you took it up to 80% loan to value. And then the price dropped, let's just keep it easy, 20%. How much money do you have left? Zero. Your shit is
well, your collateral is gone. You still have the 80% that you
we don't know. Dan might have gambled. Dan might have bought.
Oh, that's true.
We don't know what Dan did.
If he leveraged the 80% in hyperliquid at a 10x leverage, it's gone too.
We don't know what Dan did. Maybe he's the one giving loans to James Wynn.
The good thing about a loan is, you got the loan, but you lost your collateral. If your collateral, that's the way it works with these. If your collateral dips below liquidation level, you lose it.
Well, and the beauty of this is these loans are so much better because all you can lose is your collateral. In a traditional loan, you go to a bank, you post collateral, the collateral gets repriced. You still owe the difference. Like, you can't just say, keep my collateral, I'll keep the loan money. They're like, no.
That's true.
They can reprice that shit. And so they reprice your collateral. It happens in repo all the time. These are repo fails. Collateral gets repriced. And so, especially like in three-party repo, the middleman will come in and go, no. That stuff is not AAA anymore. We're marking it down. Oh shit. Yeah. This is what happened at Bear Stearns. They got a call at night from JP Morgan. Hey man, listen. Okay, Brandon, you're Bear Stearns.
Yeah. Okay. Hey, what's up? We've been loaning these things out like crazy.
Yeah, I know. Here's the thing though. We repriced your the money that you owe us on this repo transaction on these mini ones.
Wait, on the AAAs?
Yeah. So those aren't AAA. Those were actually like quadruple Z.
Oh, okay.
And you owe us $6 billion. We need it by tomorrow at 9 a.m. Cool?
Okay.
Also, by the way, the value of your entire book is $1 billion, but we need 6.
Yeah, that's what I was gonna. Hey, go board up the windows real quick, John. Yeah, we'll get that to you. Hold on, we'll get that your way. No, don't jump yet. Don't jump, not yet. Actually,
yeah, jump.
The Big Short was a good show, man. I mean, that was a good movie. Go watch it. Homework.
So the thing is, collateral gets repriced in traditional loan in legacy. But in the world we live in, if you post collateral, you take the money, that's your money, bro. You got that. They don't come get it back. You don't owe. Well, you do on that one weird platform.
The thing is, also, it doesn't go ding your fake credit report. Credit report. It doesn't go ding your credit report. It's like they took the collateral. It's just like the bank. The bank, like for example, my house is where I have a 50% LTV on it. The bank could take my house if I miss a payment.
Yeah.
It's just so strange to me, right? So they could take my house, okay? And then they go ding my credit. So now I have a 400 credit score. So not only does it hit me once, they get a house that's worth double what my loan is. So they come out ahead by selling my house for double what it's worth.
Well, no.
Or whatever, double.
No. They won't sell it for double. They'll sell it for as fast as they can sell it.
Which will be double because it's actually worth a lot more.
But what I'm saying is they won't care to get you double. They won't care to get you your money back. What they'll care about.
Well, I don't get the money. What do you mean get me my money back? They just want to pay their loan off.
No, but you get the difference. You get what's left after their fees, their this, their that, the short. Like if they take your house back and pay off the loan, the encumbrance goes back to you at some point. So, but that's after their fees, and they don't care about the price. All they want to do is get their money back. If they get $1 more than their money, they're happy. They don't give a crap what you lose. So, yeesh. You know what I'm saying? Yeesh
is right. Yeesh is right.
If you did your, if you took a Morpho loan and you put it to work, one, you should be in a good spot. Two, even if you lose that money, it's a tax-free sale.
Unless you put it to work 2 weeks ago, then you're a little bit down. But if you put it to work 3 weeks ago, you're about even.
Or if you did it Monday into Tuesday, you're good. If you did it Friday, bad. Saturday bad, Sunday good, Monday good, Tuesday bad. If you went, we don't know if you go today or tomorrow. We don't know if it's going to be good or bad.
Right now, bad. It's like
does look bad.
Yeah, we'll see. Is
it getting badder? No, it's the same bad.
It's about the same. We're not bad. It hasn't fell off a cliff yet.
Yeah, I just don't think there's a lot. I don't think there's a lot more sellers left.
I'm saying you can always short sell into infinity, though.
Well, you can short, but the problem is that when you short, infinity is your potential losses.
No, I know.
When you go long, your potential loss is the investment. When you go short, your potential loss is more than you have. Because the price can always go up. It can only go down to zero. It can go up to infinity.
In crypto, it's a little bit different. You can still only lose the leverage that you shorted, which is a little bit different than the traditional market. You don't owe money from the bank.
Right. You don't owe, which is another thing that's nice.
It's kind of nice. So if you went short on Hyperliquid, you only owe the amount you went short with because you actually have to have a cash position to go short. Yes. And so once that liquidates, then that's all gone. But you don't have to. It's not like Backpack where you have to call them and say, hey, here's some money.
Bon dia, Sapa, bon dia.
Because it actually liquidates as it goes up, which is what should make a short squeeze happen even quicker than the traditional market, because the traditional market gives you 3 days to get your money in from your bank. And then if you don't get your money in, then they close it and then they call your bank.
Yeah.
Anyway.
So, I mean,
a whole bunch of things.
I feel like there's a lot of reasons to be positive right now. I know it's,
well, yeah.
I'm not trying to whistle past the graveyard, but like, it seems like this is an investable place. That's all I can say. It seems like this is an investable place. So we go behind the wall and then get into Meteora.
Yeah, we got to talk about that. It's complicated.
It's complicado.
It's complicated, but it's not really. I'm gonna simplify it for you guys.
It's gonna be so easy. It's gonna be so easy. Even a caveman could do it.
Let me pick somebody at random. No, I'm not gonna call anybody out. Yeah, never mind. We're good.
Even a caveman.
Yes.
Okay, boom, pow.
We're going behind the proverbial wall now to continue the broadcast privately for the digital investors and digital private clients. If you'd like to join us, simply go to nickblacknext.com and subscribe to one of our plans and immediately take advantage of our library of tools, tactics, and information. It's all designed to help you learn, grow, and manage your portfolio like a pro. Join us now. We're going behind the proverbial...
Whoa! Well, he's trying to get paid twice.